Welcome back. Well, the SGX Nifty is down quite a bit, and keep in mind we had a rally on Friday. Now, there's a global picture which has turned murky. Crude is higher. We've seen, US down quite a bit. Asia is following suit, and of course, there's an exit poll disappointment. So, a lot of cues against the bulls. Ashwini Gujral, Sudarshan Sukhani, and Mitesh Thakkar now join us. Good morning, Ashwini. A gap down is given, about 120, 130. But is there a trade there for you?
Well, good morning. And if you remember, Thursday we were at these levels. So either the exit poll didn't matter. On Friday we were here, 10,600. Or the global slowdown doesn't matter. My sense is exit poll is a whole lot of news because, noise. Because I don't think we are any wiser. We knew Rajasthan was going and the other two were, close. But is it decisive? I don't think so. So probably the market is ignoring the exit poll, and for whatever it's worth, it's not going to matter. But this global slowdown is a bigger issue, and that will probably hurt the market. Not today. I believe 10,570, the lows of Friday, maybe will hold on. At least out there, I would like to get into the Bank Nifty, which is the bigger outperformer. So don't sell into the gap down because chances are we could be in a range on both Nifty and Bank Nifty, 10,570 to about 10,750, and basically on the Bank Nifty 26,250 to about 26,650. So that way I think we'll spend 3-4 days doing this up and down before we get to the next zone. We are basically going from 10,000 to 11,000, from 11,000 back to 10,000. So the journey to 10,000 will continue, but I think we'll pause here for a bit.
Okay, fair point. Good morning, Sudarshan. What's your game today?
Good morning, Lata. Well, I think good things are happening, and not in terms of exit polls, but for markets. What seems to have happened today is that the markets have decided to ignore all political news, and that's good. Because technical analysis can discount economic news, whether it's the US slowdown or Chinese slowdown or metal prices or whatever. But prices and charts cannot discount politics. I suspect markets have forgotten about politics from today onwards, and they will even ignore 2019, optimism or pessimism. They will now work purely on economics and finance, and that's good news for everyone concerned. That's this part. Now, for today, I would believe that the markets are heading towards 10,000, irrespective of what happens tomorrow morning. Suppose there's a surprise election and it's 3-0 in favor of the ruling party. Still, markets are ripe for a decline. We can only see a rally, but that's about it. So the trade is that you start building short positions by simply buying put options. If you see a rally tomorrow, that's an opportunity to sell into it. That's a simple trade. Avoid the Nifty Bank. I think the Nifty Bank will come back to what the Nifty is doing. But for the time being, focus on the Nifty. Go short.
Okay, go short. Mitesh, would that be your view as well? I mean, this global growth slowdown concern, do you think it could drag our markets lower?
Good morning. I think it will definitely have an impact. And I think, also the fact that on Friday also, while the market was rallying, I was suggesting to buy into put options. See, while there are fundamental issues, but technically, the way I could read markets was that we had broken the 200-day average on Thursday with the gap down. So after 4 days of decline, you did have 1 day of pullback. But I think getting past that gap and the 200-day average together, that will be a formidable supply point. So my sense is that upsides will be capped to 10,750 in the short term. We have maintained a target of 10,525 on the downside to begin with, and there could be possibilities of lower levels also being tested. So in that sense, I think yes, while shorting at the opening will depend where you open, but I think maybe during the day if you get a 30-40 point kind of bounce back, we will explore more shorting, though we already have put options positions in the Nifty.
Oh yeah, that is the issue, right? I mean, if you have a 140 point gap down, then do you short or not, especially for individual stocks. Sudarshan, good morning. That's the key, right? I know you have 3 sell ideas, but there's a good chance that stocks open lower. So how do you play shorts in that case? And of course, your buy ideas as well.
That's a fair question. You simply adjust the levels. The targets on the shift lower and the stops shift lower by the gap down. You still go in short. I don't think this market will willingly go higher. It's much easier to go and sell the index even after a gap down. We are willing to add to this position if there is another rally perhaps tomorrow. There's something quickly I want to tell you about the Satta Bazaar. And we keep on hearing that the Satta Bazaar is very smart and it discounts and it knows everything. It doesn't. It's as good as I and you. If the Satta Bazaar were so smart, why would they be doing Satta at all? So people, and it's not, just as an aside.
Yeah, I take your point. I think we shouldn't ascribe all these all-knowing qualities to anybody. But Sudarshan, specific stocks?
Yes, the stocks are, see, I'm not getting good stocks to short, except for mid-caps which are heading down. So Shriram Transport Finance, which is now in a bear market, Just Dial, which is finishing its distribution, both are short-selling ideas, and GSFC, which had a very tepid and small rally and should probably resume its down move. In each of these, as Anuj asked, and that's you have to adjust your stop loss and targets depending on the gap down, but still go short. UPL and Titan are outperformers. If the market stabilize, at least for intraday, there is buying here.
Okay, well, thanks for that. Ashwini, what about you? You have 2 buys and 3 sell calls this morning.
See, Pidilite is a buy with a stop of 1120, target of 1180, and at 10,570 you should buy something. So Dabur is a buy with a stop of 406, target of 424. Bharat Forge is a sell with a stop of 511, target of 495. And Gale is a sell with a stop of 339, target of 324. And Sun Pharma is a sell with a stop of 416, target of 398.
Okay, Mitesh, you have all sells.
That's right, Anuj. I think on Friday also we did take some short positions, and now I think, maybe you will not be able to execute all of them because of the big gap down. But let's see, I think, which stocks can possibly give a pullback during the day closer to the level which you've indicated here. So Engineers India sell with a stop at 114 for targets of 104. Bank of India is a sell, keep a stop at 81, look for targets of 74.5. Cadila is a sell with a stop at 355 for targets of 336, and ICICI Prudential is a sell as well. Keep a stop at 319, look for targets of 303.
Okay, gentlemen, thank you very much. We have lots more questions for you, but let's just tackle these crude prices since so much is happening there. OPEC oil crude prices, as you know, have risen almost 5% after the OPEC and the allies reached an agreement to slash production for the first 6 months of 2019. Jonathan Barrett, the CIO of Probus Securities, joins in with his take on where prices are headed. Good morning, Jonathan. Thank you very much for joining us. Is this it? 62 and the dollars for Brent, and the news is factored in. What's the range for December itself?
Good morning. Look, I think with the news of the cuts and also prospects for more, I think that we have seen a low for the market. When you start to look at how the market is actually placed, remember we had record short selling there in the commodity, but I get a sense that from here for December that we have got a low in place and probably see some short covering to see it head to the top side of the range. So I think probably a good another 5-6% on the top side is something we could probably expect.
Okay, Jonathan, hi, good morning. So you've seen a low for the market and another 5 to 6% upside on Brent. I assume you're talking about the month of December because that's what my colleague asked you. But around what level do you see Brent supported at during the start of 2019 for the first few months?
Yeah, look, I think really we have to see how the full market takes the cuts. We also have to look, I think, in terms of what's happening in Canada at the moment in terms of their supply cuts. And also the fact that a few of the larger economies, particularly China, are also importing record levels. So there are a few things on the table. But when I look at the market and I see where it is at the moment, I think we have got a low in place. And I think we'll just see, well, let's see obviously what will happen. But I think we're from support and looking for, perhaps another $5 to $6 on the top side. But I don't see it going much further than that because I still feel with the global economy looking softer, then consumption will be lower.
So what is the upper bound for the first quarter of 2019 calendar, you think?
Look, I think when you look at it, I think a lot of us are starting to think that US $70 is a little bit too high. So I think anything sub that would be something that I think is pretty much on the cards.
Oh, right.
It's very hard at the moment. The reason it's hard is because we've had so much volatility.
Oh, yes, of course. Thank you very much, Jonathan Barrett, for giving us some framework to look at crude prices. Global slowdown, of course, will work as a bearish factor, but we have seen the lows for the year.
Yes, and another 5 to 6% rally is what he's expecting. But quickly, let's get some F&O cues on board. Vinod Sharma of HDFC Securities joins in now. Vinod, hi, good morning. It looks like all the cues are stacked in favor of the bears today. What's the call for the morning?
Yeah, I think the bears are going to have an upper hand, but I will be shorting in the opening trade, and I would in fact be buying the dips. So the stocks that I've chosen are slightly different. They would not fall as much as the market. So even I'm suggesting to buy those stocks which in fact would do better than the markets relative sense. So, and that too I'm buying at lower levels. So if the viewers who are going to watch these stocks, they can accordingly tune their buying levels, but I'm going to give my suggestions. All my stocks that I have today are essentially are as a function of the rupee, which is going to open weaker, and therefore the performance of these stocks would definitely be better than the markets. So here I go. I'll take first two pharma stocks, Divi's and Dr. Reddy's. In Divi's, we have seen the open interest being built to the extent of 31% in the current series. So I'm buying the 1500 call at around 40 rupees. It closed at 47 on Friday, so I'm suggesting to buy lower. Stop loss at 30, target of around 60. Dr. Reddy's is another stock in which we have seen positions as it is, and the stock is up 2% in this nascent series. I am suggesting to buy the 2700 call at around 75. It had closed at 94. Stop loss at 50 and a target of around 120. My other two stocks, Sonia, are Infosys and TCS. Obviously, they'll benefit out of the weaker currency, and therefore I'm buying the 670 call in terms of Infosys at around 13 rupees, stop loss at 9, target of around 20. And before I talk about TCS, I would like to share with you just important statistics about the data that we have in terms of domestic buying, because Saurabh did say that India cannot, let's say, absorb the selling. My sense is that we are nowhere near our capability. We have seen the FIs, the Indian markets have made new highs for the first time ever since the FIs have come here in India, and they've sold off. So despite selling, net FI selling, the markets have made new highs 2 times this year. And mind you, that is just because 0.9% of the gross national disposable income when it is going into equities. What if that was to rise? And this goes on to say that this is just our ability to absorb FI sales is just beginning to become better, and it will. And now I'll speak about TCS. 2000 call is around, I'm suggesting to buy at 50, stop loss at 35 and target of around 80. I believe that there will be an opportunity to buy the dips today.
Okay, thank you very much, Vinod, for the contra view. We have to take a quick break. We're going to come back with pre-opening rates, and we're going to be joined by two experts, SP Tulsan of sptulsan.com and Sandeep Shenoy of Pioneer Investcorp.